criminals, money launderers and Russians under sanctions, and have also failed to stop crime when they suspected it. The documents, known as the FinCEN files, were leaked to BuzzFeed News and shared with the BBC by the International Consortium of Investigative Journalists. They indicate that London is a hub for money laundering, with billions...
Authority on Money Laundering and Financial Crimes, the founder of the Terrorism, Transnational Crime and Corruption Centre at George Mason University. And Edward Lucas from the Centre for European Policy Analysis is with me too. Louise, if I can start...
around money laundering have put our real estate and economy at risk and might be inflating our housing market.
Now, if you're a prospective buyer and you get outbid by someone with a...
Money laundering is the process of making illegally obtained proceeds appear legitimate. It is a serious crime that can have a devastating impact on economies and societies. In this video, we will decode money laundering and explore the financial web that criminals use to conceal their illicit funds. Money laundering typically involves three stages: placement, layering, integration. The placement stage of money laundering is the process of introducing illegal proceeds into the financial system. This is the first and most important stage of money laundering, as it is where the criminal must create a legitimate appearance for their money. Criminals use a variety of methods to place their illegal proceeds into the financial system, including cash deposits. This is the most common method of placement, as it is relatively easy to do and does not require any special skills or knowledge. Criminals may deposit cash into their own bank accounts, or they may use multiple accounts to avoid suspicion. Wire transfers. Wire transfers can be used to place illegal proceeds into the system quickly and easily. Criminals may wire money to their own accounts, or they may send money to associates or shell companies. Other methods. Criminals may also use other methods to place their illegal proceeds into the financial system, such as purchasing assets, investing in businesses, or using offshore accounts. Here are some examples of placement methods used by money launderers. A drug dealer deposits cash from drug sales into their personal bank account. A corrupt politician uses a shell company to receive bribes from businesses. A terrorist organization uses a cryptocurrency wallet to receive donations from anonymous supporters. Money launderers often use a variety of placement methods to avoid detection. For example, a drug dealer may deposit a small amount of cash into their bank account each day to avoid triggering suspicion. Or a corrupt politician may use multiple shell companies to receive bribes, making it difficult to track the source of the funds. Financial institutions play an important role in preventing money laundering. Banks and other financial institutions are required to implement anti-money laundering (AML) measures such as Know Your Customer, KYC checks, and transaction monitoring. KYC checks involve verifying the identity of customers and their source of funds. Transaction monitoring involves screening customer transactions for suspicious activity. By implementing strong AML measures, financial institutions can help to prevent money launderers from placing their illegal proceeds into the financial system. Layering. Layering is the second stage of money laundering, and it is where the criminal creates complex financial transactions to obscure the source of their funds. This can involve moving money through multiple accounts, businesses, and jurisdictions. The goal of layering is to make it as difficult as possible for investigators to track the money back to its original source. Criminals often use a variety of layering techniques, such as transferring money between multiple accounts. Criminals may transfer money between their own accounts, or they may use accounts held by associates or shell companies. Investing in businesses. Criminals may invest their illegal proceeds in businesses, such as restaurants, bars, or car dealerships. This can help to disguise the source of the money and make it more difficult to track. Using offshore accounts. Offshore accounts are bank accounts that are held in a different country than the criminal's country of residence. Criminals may use offshore accounts to hide their money from law enforcement and tax authorities. By using complex financial transactions and layering techniques, criminals can make it very difficult for investigators to track their money back to its original source. This is why it is important for financial institutions and law enforcement to work together to combat money laundering. Here is a short example of layering. A drug dealer deposits cash from drug sales into their personal bank account. They then transfer the money to a business account that they own. They then use the business account to purchase a luxury car. The drug dealer has now layered their money through 3 different transactions, making it more difficult for investigators to track the money back to its original source. Layering is a complex and ever-evolving process. Money launderers are constantly developing new techniques to obscure the source of their funds. However, financial institutions and law enforcement are also working to develop new methods to detect and prevent layering. Integration. Integration is the final stage of money laundering, and it is where the criminal brings the laundered money back into their legitimate businesses or personal finances. This is the goal of money laundering, as it allows the criminal to use their illegal proceeds without fear of detection. There are a number of ways that criminals can integrate laundered money into their legitimate businesses or personal finances, such as using the money to purchase assets. Criminals may use laundered money to purchase assets, such as real estate, luxury goods, or businesses. This can help to disguise the source of the money and make it more difficult to track. Investing in businesses. Criminals may invest laundered money in their legitimate businesses. This can help to increase the value of the businesses and make it more difficult to track the source of the money. Using the money to fund personal expenses. Criminals may use laundered money to fund their personal expenses, such as tuition fees, travel, or entertainment. This can help to blend the laundered money with their legitimate income and make it more difficult to detect. Once criminals have integrated laundered money into their legitimate businesses or personal finances, it is very difficult for investigators to recover the money. This is why it is important to detect and prevent money laundering at the early stages. Here is a short example of integration. A drug dealer deposits cash from drug sales into their personal bank account. They then transfer the money to a business account that they own. They then use the business account to purchase a luxury car. The drug dealer has now integrated their laundered money into their legitimate business. Integration is a complex process, and money launderers are constantly developing new techniques to hide the source of their funds. However, financial institutions and law enforcement are also working to develop new methods to detect and prevent integration. It is important to note that money laundering is a serious crime, and anyone who is caught engaging in money laundering activities could face severe penalties, including imprisonment and fines. The financial web. Money launderers use a variety of financial institutions and tools to carry out their schemes. These include banks. Banks are the most common financial institution used for money laundering. Criminals may use bank accounts to deposit cash, make wire transfers, or open shell companies. Casinos. Casinos can be used to launder money through gambling and chip purchases. Real estate. Real estate can be used to launder money through property purchases and sales. Cryptocurrencies. Cryptocurrencies can be used to launder money through anonymous transactions. Money laundering is a serious crime that can have a devastating impact on economies and societies. By understanding the 3 stages of money laundering and the financial web that criminals use, we can all help to prevent this crime. I hope you found this video informative. If you did, please give it a like and subscribe to my channel for more videos on current events and other topics. Also, don't forget to hit the notification bell so you're always the first to know when I release a new video. Thanks for watching.